Hi there. As you probably know, SoFi went up over 30% in just a few days. As you can see here, over 31%, and now the market cap is over 10 billion. This jump in the stock price, as you know, happened because they got a new deal of around 2 billion. If you read this article or news, SoFi strikes deal with Fortress for 2 billion of personal loans. So SoFi takes 2 billion from Fortress and they lend out that money to people in the US. And because of this, they get a fee, make some money. The stock price went up a lot, 30%. Now, you should ask yourself, is it too late to invest in SoFi, or this is a good opportunity? This is the question you should ask. And in this video, we'll analyze this company together. So, when you look at SoFi, it's a great company. Technology, they keep growing, the revenue keeps going up, and so on. As you can see here, their past revenue and the estimates. They expect to go up. And that's great, especially for shareholders. Now, if you look at the stock price, you can see that it doesn't look that great in the long term. The stock price was around $10 and now it's about the same. It has some ups and downs, as you can see here, a double in just a few months and then a decline over 50 or 40%. From the highest peak, the stock price went down over 60%. That's why you have to be very careful when you invest in this company. You don't want this. You don't want to invest the highest peak when the stock price is $22 and have a decline like this, over 80%. You have to look at their fundamentals and their opportunities, their growth opportunities. So, let's begin. The most important indicator for this company is their members. As you can see, they've succeeded to attract over 8.7 million members so far, second quarter 2024, and that's great. If you look at the past, in 2020 they had only 1 million, and they succeeded over the next 4 years to increase this number to over 8 million. This is a great performance. Another indicator, great indicator, you have to pay close attention to is their deposits. If you look at their balance sheet, you can see here their deposits, interest-bearing deposits, or total deposits, better said. You can see that they are around 22.9 billion. Why is this important? To look at the deposits. You have to look at the total members, as you've seen here, in this image, 8.7 million. And you also have to look at their deposits, because you might see their members to go up to 20 million, but if their deposits don't grow more in the future, then that will be a problem. Because SoFi makes money by taking those deposits and lending the money to other people via loans. So that's their business, their most important source of revenue and earnings, of course. So if you look at the deposits, you can see a nice growth rate. From the previous year, those deposits have increased from 18 billion, 18.6 billion to over or close to 23 billion. This is a great growth rate. As they attract more members, you've seen they have over 8 million, and the total deposits, this number, keeps going up, they'll be able to have more loans to lend more money to people and increase the revenue and assets. And that will be great. And that's why the market expects the revenue to increase more in the future. So this is nice. And on top of this, you get or you hear about those deals of around 2 billion. As you can see, SoFi reached a deal to use 2 billion of Fortress Investment Group for the origination of personal loans. This is great. They take money from other groups, investment groups, and they lend it to people. And of course, SoFi gets a fee. This is great because on top of those deposits that you've seen on their balance sheet, they can get more deals like this from other investment groups. And they earn a fee, which pushes their earnings up even more in the future. And that's great for shareholders. That's why you've seen this increase in the stock price, of course. Now, this is in the short term. This may happen again. They might get a new deal with other investment groups or not. But as I said, the most important thing is the number of members and their total deposits. If those two indicators go up, the business will do well in the future. Of course, there is also risk because, as you probably know, this company, SoFi, takes a huge risk. They take those deposits and lend the money to people via loans, as you can see here. Loans held for sale and investment. They are over 20 billion. And as they lend this money, there is the risk of default. Every loan can be bad or good. Only in the long term you find the answer, the final answer. If the loan that you originate right now, you lend to a person $2 billion, only after 5 years, or it depends on the term of that loan, you will find if that loan is profitable or not. Because if a person, or let's say a business, takes a loan of $1 million and they lose that money, SoFi has a loss. And that's the risk they are taking. So be aware of this. Not only on their deposits and members. But of course, if they can manage those loans well, manage the risk, diversify, they can make good money and profits. Another important and interesting fact about this company, SoFi, is their balance sheet. You have to ask the question what type of loans they own. So if you look at their presentation, or if you read their presentation, you can see that this company has different loans. The money they lend to people. And you can see in this image that the largest pie is for personal loans with 15.7 billion. Then student loans with 7.1 billion and senior secured loans with 1.7 billion, credit cards, and commercial and consumer banking loans. So the largest size, as you can see, is for personal loans. That's why you have to look at this segment of the market, personal loans, and see what's the upside, what's the opportunity for SoFi. So if you look at the outstanding personal loan balances for 2024, you can see that it was around 246 billion. 246 billion. Keep in mind this number. And SoFi has 15.7 million. So once you know these numbers, you can find out the market share of SoFi, which is around 6.3%. Now imagine how much can SoFi grow? Can they increase their loans, their personal loans more in the future? Let's say from a market share of 6% to 12%? It's possible. They can do it. Of course, if they can manage their losses to reduce their risk and increase their profits, their gains. So from the current level, SoFi can double. Of course, in their balance sheet. For the stock price, you have to be very careful. This is another important thing you have to be aware of. And that is the valuation. When is the right time to invest in SoFi? So I'll make another video about the valuation, which is available for members. If you want to see that video, you can join my channel. So let's continue. You take every sub-segment of SoFi and see their opportunity. If you look at let me show you. If you look at their product offerings in their presentation or on their website, you can see that they not only want to provide personal loans, but other services like banking, private student loans, credit cards, insurance, mortgages, investing, to be a brokerage, and travel. So every subsegment has its opportunities. You've seen only for personal loans. They can double this subsegment. Then, for mortgages and student loans, they can also do the same thing. As you can see here in their presentation, they also have home loans, which are quite small, around 96 million. And as you probably know, the market is quite huge. So there is room for SoFi to grow a lot in the future. Then student loans of about 7.1 billion. Again, they can double this segment. Credit cards, where they have only or close to 300 million. And that's another important market. And commercial and consumer banking loans. So when you look at their balance sheet, then you look at their opportunities, how much they can grow in the future. SoFi has chances to double their balance sheet. To increase it more in the future. If they do that, they'll earn more in interest, they'll get more fees, and the revenue will go up in the future. So they have a lot of opportunities. And as you've seen, on top of this, on those subsegments, they also get those deals. Deals like this. 2 billion from different investment groups to lend to people. And they get a fee. That's nice for them. So, if you want to invest in this company, be aware of the price you pay, see the valuation, assess when is the right time to invest in this company, and you might want to take advantage. But of course, you also have to be aware of the risk. A higher rate of default, dilution, because as you probably know, the number of shares has increased from 800 million to over 1 billion. So you have to be aware of this. And other laws, regulations, which can affect the entire segment. So that's it for this video, and I'll see you in the next video with the valuation.